All right, let's take the pulse of the Indian market. We're looking at February 26th, 2026, a day that on the surface looked totally flat, but underneath, it was an absolute battleground, with the entire market balanced on a knife's edge.
So here's the big question, right? What does it mean when a market just goes nowhere? Is it calm before a storm? Or is it something else? Is it actually a massive tug-of-war happening between some incredibly powerful opposing forces?
I mean, on the face of it, everything looked pretty quiet. The Nifty 50, one of our main indices, closed up by just 0.06%. You could literally blink and miss it. But trust me, that number does not tell the whole story. And just to make things even more interesting, the other big one, the Sensex, ended the day down by an equally tiny 0.03%. This right here, this is the very definition of a market in a perfect, really tense balance.
So how did we get here? How did we end up in this perfect stalemate? Well, this balance, it wasn't calm at all. It was actually the result of a huge push and pull between some of the market's biggest and most powerful sectors.
Picture it like this. On one side of the rope, you had the IT and pharma sectors. They were giving the market strong support, really trying to pull everything higher. But on the other side, pulling with all their might in the opposite direction, were the heavyweight financials, especially HDFC Bank.
And if you look at the market breadth, it tells the exact same story. Out of the 50 stocks in the Nifty, 26 went up and 24 went down. You really can't get a more perfect split than that. This wasn't a market with a clear direction. It was a market fighting itself to a total standstill.
So what this deadlock does is it creates these crucial levels for the major indices that, believe me, every single trader is watching right now. These are the lines in the sand, the battlegrounds that could decide the next big move.
For anyone bullish on the market, the Nifty 50 just feels trapped. It's like it keeps bumping its head against this invisible ceiling that it just can't seem to punch through. And here's what that trading range looks like. You've got a solid floor, a support zone holding firm around 25,300. But then you have this really tough ceiling to climb at 25,700. The market is essentially just stuck inside this 400-point corridor. Now the banking index, the Bank Nifty, it actually did a little better. It managed to close in the green, which shows some relative strength, and that's a good sign. But it's also facing its own set of problems. While its support way down at 60,500 looks pretty solid, it's running smack into a major resistance zone, a huge wall starting at 61,500. This is the next big hurdle the banking sector has to get over.
Okay, so in a deadlocked market like this one, individual stocks can become the heroes or the villains that finally force a big move. So let's talk about 5 movers and shakers that could be the ones to break this stalemate.
So here's a quick look at our key players. You've got some strong bulls like Tata Motors, Mankind Pharma, and Bharat Electronics all showing incredible momentum. And then you've got the bears, with HDFC Bank acting as the market's biggest anchor, and Angel One also looking pretty weak.
So you'll hear this term long buildup, but what does it actually mean? Well, let's look at Mankind Pharma. Its price surged an incredible 5.81%. At the exact same time, what's called open interest, which is basically just the number of open contracts, also went up. This tells us traders aren't just closing old bets, they're actively, aggressively opening new buy positions, betting that the stock is going to go even higher.
Now, for the flip side, check out Angel One. Here, the open interest also shot way up, but the stock price fell by almost 3%. This is a classic bearish signal. It suggests traders are piling in to create new short positions, which means they are betting that the price is going to fall even further. It's the exact opposite of what we saw with Mankind Pharma.
You know, with the whole market stuck in neutral, Tata Motors was the undisputed winner of the day. It surged more than 2.5%. That made it the top-performing stock in the entire Nifty 50 index. Just a real standout performance.
And then you've got HDFC Bank. The source material puts it perfectly, calling it the biggest laggard and a major drag on the indices. See, because this stock is so huge, its poor performance was one of the single biggest reasons the market just couldn't move up. Where it goes from here is absolutely key.
So with all the heavyweights locked in this epic battle, what does all this mean for the next day, February 27th? Where could the action possibly come from?
Well, while the big guys are stuck in this stalemate, the real action might actually shift over to the small cap space. You're going to want to keep an eye on companies like Jagajit Industries and Rain Industries because they're reporting earnings. And those results, they could inject some much-needed volatility and movement back into the market. And that leaves us with this one last thought. When the market as a whole is stuck in a giant tug-of-war,
Could the performance of just one single breakout stock, whether it's a powerful bull like Tata Motors or a heavy drag like HDFC Bank, be the one thing that finally snaps the rope and decides the market's next big move? We're going to have to wait and see.